Hey everybody, it's Jack, and it's Thursday, May 2nd. I wanted to give you a picture of what the market's doing. You know, people say a picture is worth 1,000 words. So let me just show you the condition of the broad market, and then we'll look at a couple stocks. Now, first of all, I like to look at ticker symbol SPY. This is an ETF that tracks the S&P 500, and that's the biggest broad market index with 500 stocks in it. So I also like to look at it in a 6-month time frame in a chart. That tells me everything I need to know. And here it is right here. It's really struggling. It's got some resistance right here. We've got 2 trend points above where the market is. So it's struggling hard to get above this level right here. But look at how beautiful that trend was until it wasn't. Now it's really struggling. So these daily bars are not higher highs and higher lows. It's just bouncing around inside there and has a tiny bit of overhead resistance. I also like to look at DIA. That's an ETF that tracks the Dow Jones. This one is a little more bearish. You see it is having a real tough time getting over this 38.4, 38.5 level. Real tough time. And then QQQ, I love to trade tech stocks. So I always look at this index. And it is also, just like the SPY, slightly bearish. Technically, it's trapped in no man's land when it's trapped between trend points. But you can see the long-term trend point is kind of flattening out. We've got both the short-term and the intermediate-term trend point at the same point, which is rare. Now, if that green point goes below the blue point, the market's going to fall down to here. That's true of all the indexes. Now, another condition I like to look at is what stocks are making new highs and which ones are making new lows, and specifically the number. So I'll just scroll through here. We don't have that many stocks making new highs right now. Not that many compared to what we did have. That shows you we're in a not so bullish or bearish market. See, and this is not quite 50-50. We've got stocks, many stocks making new lows as we do making new highs. So that's going to create a lot of volatility. And some of these are just going to head lower. Look at that. Going lower. That one's going to go lower. If you're going to short a stock, I like to find the triple-digit stocks. You can short it or buy a put. But psychologically, a triple-digit stock has a lot more room to go down than, say, a $17 stock or a $10 stock. I wouldn't do that. Let's look at Starbucks. Woo, fell off a cliff. Now, that gap will have to be filled in going forward, so it might pop a little bit. Then on the upside, that's a good trend, AER. That's not bad. Nope. We got still some decent ones. That's pretty good considering what market we're in. That's really good. So whatever the market condition is, there's always stocks going higher. There's always stocks that are going to be bullish no matter what. But right now, it's kind of going both ways. You can go long, you can go short. Well, that's a gap there. That's a really nice trend in GNK. Garmin had a pop. That won't stay up. That's not bad, Goldman Sachs. So we got some good ones in here. Good ones going long. The market's really bumpy. Got a lot of overhead resistance. So really set a tight stop. If you're going to buy a stock, set your stop loss 7% below your purchase price. And you can even, on some brokers, set an order to sell it above your purchase price, say 15%, and set it up so one cancels other. That way, if you buy this stock and you got a sell order up here 15% higher and a sell order down here 7% lower, whichever one gets hit first, that's going to cancel out the other one. One cancels other. It's not a bad strategy to use in this market. Just consider it. This is Jack. I'll talk to you soon.